And we want to welcome you to our town hall that we've been doing every couple months. And our intention here is to share with you a couple of things. One is for Brandon to spend a little bit of time talking about what's going on in the markets and the economy and areas related to that. And then I'm going to spend a little bit of time the second half talking about sort of the financial planning corner, some of the things that we're working on, some of the things that folks are asking about that's coming up more in planning conversations. So again, we're thrilled that you're joining us tonight. You're automatically on mute, but if you have some pressing questions, feel free to send those via the question link down below. And if we're able to, we'll try to answer them on the spot, or we can get back to you offline if that's more helpful. So I think with all of that said, Brandon, we go ahead and have you get started here and kick things off.
Sure. Yeah, thank you guys. Just to echo Adam here a little bit, thanks for joining us again. I think this is the second one we've done now in this series. So as long as these are helpful, we'll kind of keep them going. But the idea here is just to kind of catch up on what's going on and what we're looking at ahead. It's still just crazy to me that we are in the midst of all this, coronavirus. I know last we did this was basically, the heat of everything. Markets were getting crushed. We all, I think, kind of felt a little down. I'll say I certainly did. It was hard to kind of see the light at the end of the tunnel. And here we are, 3 months later, and, still things are closed, and obviously still people are getting sick. So it's a crazy time. And, above all else, hope you guys are doing okay. As I kind of reflect a little bit, going back, to the last time we did this, again, we were almost near the bottom as far as the market goes. As we had talked about last time, I don't want to make any light of this, but what I will say is that this is not the first time we've had an unprecedented event that has affected the markets. And this is why it's so important to stick the course. Last we spoke, at the bottom of this pandemic in the markets, the U.S. markets were down nearly 35%. And if you've been following, you've probably seen that we've kind of ripped and we're not back to where we started, but we've had a huge run up since that kind of bottom that we saw back in March there. So I know it's really difficult, but this is why sticking the course, thinking bigger picture is so dang important. It's kind of like, and I think, as far as emotion goes, right? We talked about that a lot last time. The emotions get into the way on both sides of the equation. It's like kid in the candy store, right? When things were going really bad, we were all scared. We wanted to sell, but again, because we had some risk management in place, we were able to kind of take advantage of that opportunity. When the markets were down, it's kind of the opposite effect. It's like that kid in the candy store I mentioned, where it's kind of like I want to buy everything, and we end up with a sugar high and waking up the next morning not feeling so great, right? So I think as we climbed out of that, and still today, because we are not by any means out of this coronavirus pandemic, it's really important to understand what you own and why you own it. And so what a lot of you have seen from us, and what I would suggest is that if there is any buying, that it's important that what you're buying is quality. We saw a lot of people run to the bankrupt stocks and some of that stuff that was really beaten up, and that may work out, but there's still another some problems ahead of us here. So it's really important to own some quality assets at this point, I think, and especially moving forward. So since then, one of the reasons we've had this huge run up in the stock market has a lot to do with the Fed and stimulus. Right now it's been about 7 trillion, I think, is the most recent number spent on either buying assets or stimulus or unemployment. Like, all that combined has been a huge number, and that's 7 with a T, trillion. So, it's just amazing what we've seen since then. It almost feels like every time we start to get a little concerned, there's another program or another something that rolls out, which, has helped a lot of people, but certainly may have an effect on the back end of this too, right? If you have $1,000 and that's all you have, that $1,000 is extremely valuable to you, right? You want to keep that, you want to preserve it, you want to do all you can with that. But if you ran into a money printing machine, $1,000 all of a sudden is not quite as valuable, right? it may not mean quite as much. You can print off another 1,000 if you lose that one. So I'm saying that to kind of share a point as far as what's going on right now with all this spending that we're doing and all this money printing. It's important to keep an eye on this because we're really, I don't want to say cautious, but we're really watching what may come with inflation in the months ahead, years ahead. So that's something to really keep an eye on as kind of an after effect of all this. You know, the current state of the markets, again, we're kind of back up. The jobs market has been something we've been paying a lot of attention to. Just last month for that would have been for May, or sorry, for June, we added 4.5 million jobs. So that was awesome to see. You probably, you know, if you followed, you noticed the markets pick up significantly from there. But I think, you know, not to rain on that parade, but just be cautious with some of the news that we're hearing right now. You know, we hear all this and it sounds great, but it's important to also read between the lines and understand what may be happening there. That was before we started seeing a spike again. And so, you know, who knows if some of those jobs are still in play, who knows what's going on there. So it's really important to kind of keep track of what's happening there and watch the job market for sure moving forward. You know, as we look ahead, I think one of the things that we'll start to hear a little bit more about is going to be the election coming up. You know, it seems like that's been almost pushed to the side, and rightfully so with the pandemic. But, you know, if this starts to subside a little bit or just, you know, I think we're all aware of the, you know, kind of the media's narrative lately. If that switches, which I think it may, we may hear a lot more about the election coming up here shortly. And, you know, I think to put that in perspective a little bit, when we look backwards, the election hasn't necessarily dictated the market one way or the other, right? I think a lot of people may think one party versus the other may mean a good or a bad thing for the markets. Historically, it really hasn't. What it has meant is a knee-jerk reaction. And then things kind of smooth out. You know, we generally find that, you know, Congress and the House are doing what they're meant to do. And so it's not all a one-party system one way or the other. That said, there always is that knee-jerk reaction. I mean, look at, it's funny, look 4 years ago when Trump was elected. Some of you may remember this. I remember watching that night, watching the markets, and the futures were down something like 1,000 points when it was first announced. And then I woke up the next morning and, you know, they were down like 200 points and we ended up closing up, I think, like 600. So, I mean, that's an extreme example, but you get the idea, right? There's going to be some reaction one way or the other, but generally it may not mean as much as you may think on the surface. Okay. Another thing to kind of keep in mind, though, with the elections is whichever party is elected, there may be some effects of that, right? If Biden, you know, is elected as president, we may certainly see some higher taxes. That's something that he's running on for sure. You know, if Trump stays in the office, the trade wars with China probably will continue. And so the reason I bring this up is maybe to consider how you position for whatever may come, right? And that may mean, you know, a slight tilt towards U.S. assets, for instance, in case of a trade war. That may mean things like Roth, which, you know, is more on the planning side of things, but Roth if taxes are higher, right? So there's a lot to consider there. And you know, we don't have the crystal ball on who will be elected, but just understanding that, you know, it may not have as long-term of an impact as is typically thought, but understanding the implications of what may be on the back end is more important. So as I kind of wrap up, and then I'll let Adam take it from there, you know, the theme I think for us is cautiously optimistic. I think that's the best way to put it. You know, we think long-term things will look good. I don't know that we feel that we're out of this right now. You know, I think the spike in cases is no surprise. If we open back up, you know, the virus hasn't gone away. And so I think that's almost expected. But we may certainly see some volatility in the months to come. Long term, I think things still look great. So, you know, I think cautiously optimistic is the best way to put it. And one of the keys is to keep an eye on what happens on the back end. So inflation's a good example. You know, the taxes, those kind of things are things that we're really helping to take a look at. And I think with that, I will wrap up here a bit and kind of let Adam take it from here.
Okay, perfect. Thanks, Brandon. Great job. So what I wanted to talk about on the planning side are a couple things, but I want to go back to what Brandon said at the very beginning, is that we find ourselves 3 months later since our last call in a kind of in a different place, yet the same place. 3 months ago, there was a lot of panic. There was a lot of uncertainty. Every day we were hearing these scary and tragic and sad numbers about people that were diagnosed with cases and people that were passing away. And it was terrible. And now I wouldn't say we're past that. Certainly we're seeing, spikes in numbers and growth where we certainly don't want to see growth in diagnoses, but we also have a little bit more of a level of acceptance and tolerance for it right now. I think right now almost everybody carries a mask around in their car when they go somewhere, or they're prepared to wear a mask. And we see businesses beginning to reopen. Funny story, 2 nights ago, we finally decided to venture out and go out and have dinner out, my wife and daughter and I. And so we went to a restaurant, we sat outside, all the tables are spaced apart, which we totally expected. Most everybody is wearing a mask if they're able to, unless they're eating. But the strange thing is that for all the folks that were not eating, they were all on their phones, every single one of them. And I couldn't figure out why. I was like, well, have we come to a point where people just can't talk to each other anymore, or where are we at? And then I sat down and realized why. In this sort of coronavirus restaurant world, nobody's giving out menus anymore. All the menus are done by a barcode in the middle of the table that you snap on with your phone, and now you have the menu on your phone. So this is where we are. This is the level of sort of dealing with this and making adjustments that we find ourselves. And so when it comes to planning, there are parts of planning that never change. There are parts of planning that are fundamental, they're basic, that we always come back to. But some of those areas tend to come to the front burner during certain times. And one of the areas that we've seen really come to the front burner is the planning piece that really revolves around estate planning. And I'll talk more about that in a moment. But I think what I want to do real quick, and we touched on this last time in more detail, is just as a reminder, in case there's anyone listening that was not on the last call, back in April, Congress passed something called the CARES Act. And the CARES Act was the congressional move that was designed to infuse the economy with cash, send out those stimulus checks that some people still haven't received. But what it also did was help out folks in a couple different ways when it comes to planning. So one of those ways, as a reminder, is that for 2020, no one is forced to take out an RMD this year, required minimum distribution. Now, I realize that the age has been kicked up to 72, but the challenge with the RMD is that the amount that someone has to take out of a qualified retirement plan was based on the account value at the end of 2019. And at the end of 2019, things were going really well and values were very, very high. So one of the things that was decided, which I think is very fair, is that because values are down right now, we don't want to make everyone have to take out more money than they need to, especially at a time when values are low. So if you're already taking RMDs, if that's part of your income stream and your process, you don't have to change that. But what everyone that is in the RMD area can do is decide not to for this year. So that's a possibility, and that's an option that can help out when it comes to planning too, because the more you leave in, the more it can grow. The other thing to mention real quick too is that in the CARES Act, there was also a provision that allowed people to take out a much bigger loan or a distribution from an existing qualified plan, like a 401k or a traditional IRA. So with that, the amount you could take out was increased to $100,000. So you have that capability, assuming you have that amount in your plan. And the other piece, two pieces actually that are important, is that if you do that under the age of 59 and a half, there's no penalty. Normally there'd be a 10% penalty assessed on what you take out, but that penalty was waived. And the other piece of it is that the taxes that would be due on the distribution are now split up to be paid back over 3 years if you want. So a little more flexibility on how the taxes are paid. So the kicker to that is that it's really meant to be used if someone is affected directly from coronavirus. I would say that in some way, shape, or form, almost everybody can make the case that they've been affected by it. So that is out there too as a means of handling any kind of short-term, financial emergencies or influx of cash if that's what someone needs. So those are the two things that we still are working with when it comes to the CARES Act. Now, the area of planning I was talking about before, when it comes to estate planning is what I thought I would do is just give a quick reminder of what makes up a good estate plan. Estate planning is a long conversation, and it's very individual and it's very values driven. But I do want to talk about some of the basics that go into a comprehensive estate plan, because unfortunately, almost everybody at this point either knows someone that's had coronavirus, maybe someone that's had a rough case of it, or maybe in some cases someone that might have passed away from it. So estate planning is really, like, percolated back to the top of the importance when it comes to planning. And so I just want to kind of review what constitutes a good sort of solid estate plan. One of the first things, maybe the most important thing that everybody can do, is just make sure that beneficiaries are correct on all accounts. That could be retirement accounts that you have while you're working. It could be retirement accounts that you have after you've retired, IRAs, that sort of thing. But also, to make sure that if you are still working, your beneficiaries are tuned up, not just on the 401k and investment side, but also on the health and wellness side. If you call your 401k provider and say, I want to make sure that my beneficiaries are person X, Y, and Z, they do not convey that information to the life insurance beneficiary side, right? That has to be done separately. So just making sure that those two things are in alignment, that they both reflect the beneficiaries that you want to make sure that you're going to take care of if something happens to you. One of the other areas, I think the most common area when it comes to estate planning, what most people think of right out of the gate, is creating a will, right? And the question comes up, well, who needs a will? And the short answer to that is really anybody, anyone that has anything they want to make sure gets passed on to someone else efficiently when they're no longer here. So basically what a will does is determine who gets your stuff. Now, it is actual property. It's stuff that you can touch and see, but it's also accounts that aren't retirement accounts. If you have a non-qualified account or a brokerage account or something like that, that's considered property, believe it or not, and has to be taken care of and addressed in a will. I'll tell you another quick story, and some of you may appreciate this, but I was born and raised in Miami, Florida. My grandparents had a really cool house right on Biscayne Bay. And I remember when I was 11 years old, we had something called Sticker Day. This happened one time, but it was so unusual that it stuck in my head. And so what we did is my family, my parents, my sister, and I, we went over to my grandparents' house along with my dad's brother's family and his second brother's family. And when we got there, what our grandparents gave to them were these colored stickers for them to go through the house and put colored stickers on all the things that they wanted, because they were going to redo their will and wanted to make sure that the wicker furniture went to this person, the china went to that person, that the piano went to whoever wanted that. So this is all part of that will creation process, like who gets my stuff. And the more accurate and detailed the will is, the easier this flows through probate, the simpler this process gets. It's never easy. It's never something that happens with no friction or no hurdles. But the more detailed we can be with our will and with our estate plan, the more efficiently we can move through the probate process. So a will is always very, very important. The next thing is a power of attorney. Not everybody needs a power of attorney, but what a power of attorney does is to give someone else the decision-making process if you're not able to make it for yourself. So a power of attorney can be for financial decisions, it can be for all decisions, it can be limited, or it can be comprehensive. But for example, since I see him, if I give Brandon a power of attorney, if I can't make decisions, he'll make all of them for me until I pass away. When I'm no longer here, no longer alive, power of attorney stops. And what happens next is that we refer to the estate plan for guidance on how to go forward. So power of attorney is another very important part of that. Another piece of this, which can be maybe a minor point, it's not critical in the early days, but it's being familiar with HIPAA forms, maybe even having some of them filled out ahead of time. Because in a situation where someone has to move from facility to facility, where information needs to be transferred relatively quick, having HIPAA forms for those institutions already filled out and on file can speed that process, okay? Another piece is having a living will and or a healthcare proxy, which are related, but they are very different. What a living will does is it is generated by you to instruct on what you want to have happen medically if you can't make the decision for yourself, right? That would be the try to revive me 2 times and on the 3rd time, let me go. It's my own decision, what I want to have happen. Where that's different from a healthcare proxy is a healthcare proxy is someone that I designate to make medical decisions if I can't do that. And that's, again, a very distinct difference. So, for example, if I am coaching softball and my daughter clocks me in the back of the head with a bat and I'm unconscious, my wife is going to be my healthcare proxy. She's going to make, hopefully, good decisions on what happens medically for me. Okay? So we want to make sure we make that distinction and have those people named, or at least give them a sense of what the expectation is. One note I'll say about a healthcare proxy is that if you're going to name your brother, for example, and your brother lives in Florida, it could be a little tricky, right? Because if there's a medical decision to be made and there are time zone differences or availability or access challenges, that could cause a bit of a problem. So just keep that in mind. The last thing I'm going to mention when it comes to a comprehensive estate plan is something called a digital fiduciary. And I'll do this so you can see it. Digital fiduciary. The reason why I put it in air quotes is because it's not a legal term, right? What we're talking about here is some sort of process or way of tracking passwords and user IDs. So some of you may already have a sense of how this works, but in most households, there is one person that does all the online bill paying, or all the online tracking of investments, or whatever it's going to be. And the other person, not that they can't do that, but it's just not their sole responsibility. And so for the one person that knows all the user IDs and all the passwords, if they know those and don't share them, there could be a challenge if that person can't, go online and access information. Now, it doesn't mean that a spouse would not be able to get information on a 401k or an account, but if there's some system of having those user ID and passwords tracked or monitored or recorded, that makes the process a whole lot easier, So whether that's something simple like writing them down, pencil to paper, whether it's having some sort of like an online cloud-based, I'm drawing a blank on the common ones. Can you remember those big ones, Brandon, the ones that we've used in the past? Anyway, some sort of online system that tracks those. I didn't mean to put you on the spot. Or even like storing them on a flash drive or whatever it might be, that's all helpful. But the most important thing is that if you do that, make sure others know where that is, right? Which leads me to my last point, going back to estate planning as a whole. If you've created trust documents, if you've created a will and testament, if you've done all that work, but nobody knows where it is and nobody can access it, like, what have you actually done? Right? It's like the old, if a tree falls in the forest and no one's there to hear it, does it make noise? If you've done all of your estate planning and you created a will, but no one knows where it is and can't find it, right? Have you really, what good is that going to do? So the bottom line point of that is, if you're going to go through the motions and the effort of creating an estate plan, whether it's some, most, or all the parts that I've mentioned, make sure that someone knows where that is. If you trust your financial planners, if you trust your attorneys, give them a copy that they can store for you electronically. So at least there's some place that you know it's going to be. So just want to keep that in mind when it comes to to estate planning and all the different documents that can come from that. Now, do you need an attorney? I don't know, maybe if you have a complicated case. You don't need me to tell you that attorneys charge a lot of money and can be very challenging. But sometimes too, it can be, if it's a simple case or a simple estate plan in the early days, it can be using any of those sort of online document tools as well. So if you do that, make sure it's going to be recorded, make sure that it's notarized so that it carries some weight with it. But the truth of the matter is, some estate plan is better than no estate plan. Even if you write down on the back of a napkin, when I'm no longer here, I want my buddy to have my Xbox. In a manner of speaking, that's an estate plan too. It can be that simple. So when it comes to things like naming beneficiaries, guardianship, what happens in special needs cases, what happens to kiddos when they turn 18 and take on responsibilities of their own, those are more complicated cases of estate planning, but still should be, sort of weighed and measured in terms of how we want to proceed and what we want to have happen. Because where good estate planning starts is with knowing what the mechanics look like. What do you want to have happen when something happens to you? And we build the documents behind that to support that and to make those things happen. So I think that's a good place for me to kind of stop on a high level of estate planning. There's a lot more to it. I mean, there's trust that can be used. There's guardianship decrees. There's all kinds of pieces that fold into this. But from a basic standpoint, when we think about, gosh, what do I want to make sure that I at least have handy and ready or developed in a time where people are getting sick and in some cases passing away, this is one of the areas of planning, probably the most important area of planning that we can talk about right now. So thank you for that. I really appreciate it. Brandon, any last words before we let everybody get back to their dinner time?
I don't think so. I think, I think that that's a really good thing to bring up though right now. I think a lot of people have that on their minds. So a lot of good stuff there. And, just want to thank you guys all once again for joining us here this evening, and look forward to seeing you all next quarter, if not in between, obviously, as well.
Yep. Thanks, everybody. Really appreciate it. If you have any questions about anything you heard tonight, feel free to send an email or a phone call. And I wish everybody a wonderful evening, and we'll see you next time.